Registration and record-keeping requirements for exempt entities under the corporate tax law. The UAE's corporate tax law recognizes certain entities as exempt from taxation, including government entities, government-controlled entities, extractive businesses, and non-extractive natural resource businesses. These entities are typically excluded from the obligation to register for corporate tax, provided they do not engage in any business or activities that are subject to corporate tax. However, despite their general exemption, these exempt persons are still required to maintain specific records for a defined period, in order to substantiate their exempt status if questioned by the Federal Tax Authority, FTA. No requirement for registration, but record-keeping is essential. While government entities, government-controlled entities, and those engaged in extractive and non-extractive natural resource businesses do not need to register with the FTA for corporate tax purpose, assuming they do not have a taxable business activity, the law mandates that these exempt persons retain thorough records related to their exempt status. This includes keeping relevant documents, accounts, and any information that clearly demonstrates their exemption eligibility. The required retention period for these records is 7 years from the end of the tax period to which they pertain. These records are essential not only to substantiate the entity's exempt status but also to enable the FTA to verify and confirm that the exemption conditions continue to apply. This record-keeping requirement is a critical aspect of compliance, ensuring that the FTA can readily ascertain the exempt status of the entity at any time during the statutory retention period. The records must be comprehensive and must include any documents or financial statements that demonstrate how the exempt person has adhered to the corporate tax law's conditions for exemption. Exempt persons engaging in taxable activities. Although government entities, government-controlled entities, and certain businesses like those involved in extractive and non-extractive natural resource activities are generally exempt from corporate tax, there are instances where they may engage in activities that are subject to tax. Such activities typically occur when these entities conduct business or business activities that fall within the scope of corporate tax. When exempt entities conduct business activities. A common example of an exempt person engaging in taxable activities is when a government entity holds a license to conduct a business activity that is not related to its sovereign or public functions. For instance, a government entity might obtain a license to carry out a commercial activity such as entering into a public-private partnership to develop infrastructure or providing goods and services for sale. In such cases, the licensed business activity is treated separately from the entity's exempt functions, and as a result, the entity will be considered a taxable person for the specific business activity it conducts under the license. This differentiation ensures that the exempt person is taxed only for the taxable business activity and not for other activities that are part of the entity's exempt status. Example of a government entity conducting independent business. Consider a federal government authority, which is classified as an exempt person under the corporate tax law. The authority conducts public tours of its offices on specific days and charges an admission fee. The authority has obtained a license to conduct this business. Although the authority remains exempt from corporate tax on its general functions related to governance and public duties, the business of conducting paid tours falls within the scope of taxable activities. In this example, the government authority is conducting a commercial activity under a license, and thus it is treated as a taxable person only with regard to this specific business. The authority must maintain separate financial statements for this activity, as if it were an independent business, and calculate the taxable income derived from the tours. The authority will be required to file a tax return for this licensed activity, reporting any taxable income associated with it. Importantly, this does not affect the exempt status of the authority's other activities that are in line with its governmental duties. These non-licensed activities, which form part of the authority's public functions, remain exempt from corporate tax. Key takeaways. 1. No registration requirement. Exempt persons do not need to register for corporate tax unless they engage in taxable business activities. 2. Record keeping. Exempt persons must maintain records that substantiate their exempt status for a period of 7 years. These records should enable the FTA to easily verify the entity's exemption eligibility. 3. Licensed commercial activities. If an exempt person engages in business activities under a license, example, a government entity selling goods or services, such activities are treated as taxable and must be handled separately for tax purposes. 4. Separate accounting for taxable activities. Entities that engage in taxable activities must keep distinct financial records for those activities, report their taxable income, and comply with all relevant corporate tax obligations concerning that specific activity.